5 of the most common mistakes when investing in real estate. So number one on that is picking the right strategy. See, a lot of times when people come to real estate, they get into wholesaling a property, they get into flipping a property when they really came into real estate to build wealth. See, if you're looking for retirement, if you're looking for cash flow, and if you're looking for wealth, then you're not going to do that by wholesaling a property or by flipping a property. That can make money, but it's certainly not going to build long-term cash flow income. You need to think about long-term rental properties, you need to think about mid-term properties, and you need to think about holding short-term rentals. The second most common mistake is overpaying for properties. It's very normal that any of us, when we get into real estate, we don't realize the difference between retail price versus wholesale price for any given property. We look at the multiple listing service and we look at what the properties are selling for, and if the property is selling for, say, $350 in today's market, if we could get the property for $250, we think, oh my God, that's such a good deal. One of the biggest mistakes that people do is not understanding how to be able to buy the properties and the right price to pay. Third biggest mistake is taking on too much. I'm talking about the rehabs. I know on all the HGTV shows or any of the big shows that you may watch or some of the YouTube videos, they'll show kind of a property that was absolutely trash and then they will show you the large amount of cash. That's really not the reality. What you don't really want to do is take a property that is completely devastated and turn it into a Taj Mahal. What you're looking for is properties that need some amount of work. Carpet, paint, kitchen and bathroom updates. Those properties will always get you the highest return, and relatively they're easier to do, and your kitchens and baths are the highest rate of return in terms of your rehab. Number 4 is, this is a big one, it's big deals don't make big profits. A lot of times the myth in real estate is, oh my God, if I can make $50,000 or $60,000 in profit on a $250,000 or $300,000 deal, then if I do a $600,000 deal, I'm going to make a lot more money. As in real estate, there is a bell curve, and the bell curve exists in the median, meaning that properties that are priced in the median tend to result in the highest net profit when we talk about percentage, meaning the price the property was sold for versus the net profit on that particular deal. So bigger is not always better. And number 5 is risk versus reward. A lot of times new investors will engage in risky behavior hoping for a really big reward. Risk does not mean a big reward. Actually, learning how to avoid risk is what makes you the biggest profits when investing in real estate. This is Andrew Holmes from 257 Cash Flow. Talk to you soon.